Hey, and welcome to our latest presentation. I'm Valerie Leonard, founder of EverThrive Financial Group. Each month, we share 5 things you need to know as an investor so you can make informed and confident decisions. For the month of July, we're going to give you an update and talk about what to possibly expect for the remainder of 2024. First of all, I want to give you a little bit of context as to where we are. June was a strong month. The NASDAQ hit record highs and so did the S&P 500, as you can see in this chart here. This chart is illustrating how the S&P 500 has performed over the past 20 years. So you can see the strong uptrend even in the right side of your screen where the market has performed really well recently. Bond returns have been positive due to falling interest rates because remember, they work opposite each other. And internationally, results were choppier though. The more developed markets pulled back slightly at the same time that emerging markets were up. Also, consumer inflation is dropping, and even if it doesn't seem to be making an impact in your wallet just yet, we have expectations that headline inflation may dip just under 3% for third quarter, which should hopefully help consumers out. We're seeing solid economic growth overall, even though some areas of the economy have slowed a bit. And our team, as well as most economic analysts, are predicting steady growth for the remainder of the year based off of the data and the economic conditions that we're evaluating right now. Second of all, as you know, here at EverThrive, we always try to look at information from all angles, not just what we see on the surface. And while the market as a whole has been relatively steady, with the S&P 500 never rising or falling more than 2% in a single day in recent history, when we look at individual stocks, it actually tells us a more volatile story. All right, so this chart here is going to show the activity for NVIDIA this year. And NVIDIA is up more than 150% for 2024. But keep in mind that the stock price has also plunged multiple times in the last 6 months. When you look at the broad market and you look at all companies that make up the S&P 500 index, about 60% of them have risen more than 10% above their lows for the year. Okay, so why am I talking about all of this? Well, here's the thing. When we see extreme volatility or we see widely ranging stock prices outside of the norm, just like you see in this chart with NVIDIA right here, we call this dispersion. So, in layman's terms, dispersion may help give us an idea about what range of potential outcomes an investment may have based off of how it's performed or how volatile it's been in the past. And what you're seeing right now is big fund managers have found ways to take advantage of what's generally been a pretty calm and steadily rising market this year by taking advantage of the volatility in certain individual stocks. Now, on this chart, I chose to illustrate NVIDIA because it has had so much media attention this year. And so this isn't a plug necessarily for the stock itself. I just wanted to educate you and give you an example as to what's happening underneath the surface of the market. So the bottom line, the bottom takeaway is that dispersions are right now at historic extremes. And so this is definitely something to watch. Third, we've mentioned concentration risk nearly every single month this year when I've recorded these videos. And we've talked about the dominance of the top 7 stocks that are responsible for the majority of market gains. So, of course, these companies are Google, Amazon, Apple, Meta, Microsoft, NVIDIA, and Tesla. So, with dispersion, like we talked about in the last slide, underneath the surface of a more tranquil index, investors may be able to protect themselves by following the tried and true principles of sound investing. So, what are those? These are things you might want to think about. Number one, diversify your investments. Invest within your own personal risk tolerance. Don't ever take more risk than you're comfortable with. Number three, avoid trying to time the market. Fourth, avoid over concentration in certain stocks, even if they seem to be the latest, greatest hot topic sector or one of the hyped up companies that you hear about in the media all the time. Try to avoid too much of a concentration or too much exposure to any one company. Fourth, one interesting situation right now is the state of real estate. So the market is pricing in one potential rate cut in the month of September. And that's good news for the real estate market, of course, because there's a lot of investors on the sideline, or even just, general Americans who are on the sideline who are looking for their next home and they're waiting for rates to come down, right? But one fact that I thought might be interesting for you to note is the state of the neighborhood retail real estate market, which many people think has the potential to outperform other real estate asset classes. So when you think about essential retail, think about grocery stores as an example. We've seen record low vacancies in this area. And also because more people are working remotely or working in a hybrid format, neighborhood retail has been benefiting from this trend. Now, when you think about the retail space in general, of course, we've got to consider e commerce, but e commerce continues to grow, but it only makes up about 15% of total retail. And so there continues to be room for brick and mortar retail players. Fifth of all, investment risks that you're probably already familiar with could still trigger some market volatility. So think about global conflicts around the world, inflation stickiness, the uncertainty surrounding the US presidential election. Economic fundamentals, of course, are strong, like I already mentioned, and these fundamentals should hopefully temper the effects of these types of risks. But of course, they still bear watching. You know that investing can never be truly risk free. And that's why risk tolerance profiles are key, making sure your portfolio is in line with how much risk you're comfortable taking, of course. Thanks for watching, and thanks for subscribing to our YouTube channel to be notified of the latest updates. Of course, we'll see you next time. And my parting words for this month are keep playing the long game and stay focused on your own long term strategy. Thank you for joining us, and I'll see you next month.